Hi everyone, today we are going to discuss Gravita India fundamental analysis. This is not the recommendation, we are going to discuss for education purpose only. I am holding Gravita India Limited, so use common sense before taking any financial decision. So what Gravita India business? So here if you go to business verticals, here they have manufacturing, consultancy, turnkey solutions, raw material procurement. If you go to manufacturing, here they have battery recycling lead, aluminum alloys, plastic granules. If you go to consultancy, here extended producer responsibility. If you go to turnkey solutions, here lead chemicals, turnkey lead, turnkey aluminum recycling. If you go to raw material procurement, here lead acid batteries, lead scraps, remelted lead, aluminum scrap, plastic scrap, rubber scrap. So here they have 4 business verticals. If you see management, here leadership, chairman is MP Agarwal and founder managing director is Rajat Agarwal. Now we'll check financial information. We'll open screener. Here we'll check the financial information from 2020. Here in December quarter 374 crores. So in December 2020 374 crores. It's increased from 374 crores to 758 crores. Here growth is good. If you check net profit, so 2020 here they have 17 crores and current 61 crores. In 3 years, here profits increased from 17 crores to 61 crores. So it's more than 3x. This is good side. Now we'll check yearly profits. Here we have results from 2012. In 2012, here sales are 269 crores and current last 12 months 3468. So sales increased from 269 crores to 3048. If you see here 269, then 398, then 516, 501, 430. So here little bit decreased. Later, so in every year here sales are increasing. So only in 2016 and 2015 sales are decreased. Remaining all the years sales are increased. So this is a positive sign. So if you see operating profit margins, here the range is 7% to 5%, 9%. Here in 2012 7%, and then 2019 here 5%, like that. Currently 9%. Okay. And if you see interest, in 2012 they are paying 3 crores. Now they are paying 47 crores. So that means that their interest increase means debt also increased. So if you see the net profits, it's increased from 16 crores to 237 crores. See here, so here 16 to 24, 24 to 22. Here decrease 22 to 10, 10 to 5. Here 3 years profits are decreased. Later increased from 35 crores, 48 crores. Then here it decreased. Then 37, 57, 148, 204, 237. Here increased. If you see here, profits decreased in 2014, 15, 16. Later in 2019. So remaining all the years, their profits are very good. If you see compound sales growth, here 10 years 22%, 5 years 22%, 3 years 28%. So here these all the sales growth are very good. Last 12 months only 12%. This is one negative sign. If you see profit growth, here 10 years 27%, 36%, 69%, 31%. Their profit growth is very good. This is positive sign. And if you see return on equity, here 10 years 27%, 5 years 31%, 3 years 38%, last year 42%. So here return on equity also very good. This is also positive sign. If you observe results, here sales are increased from 269 crores to 3046 crores. Only in 2015 and 2016 sales are decreased. And if you see the profits, here 2014, 15, 16 profits are decreased and 2019 profits are decreased. Remaining all the years profits are increased. This is positive sign. And if you see the dividend payout, so initial years like here 36%, 29%, later it decreased. So 15%, 14%, 15%, 15%. So this is a positive sign. They are giving less percentage as a dividend payout. Okay. If we see shareholding pattern, here promoters having in 2021 as 73%. We'll see yearly. Here yearly. In 2017, they have 73%, 73%, 72%, 72, 73, 73, 73. So from March 2023 to December 2023, here promoter holding is decreased. How much decreased? 73 to 66 means. So approximately 7% decrease. This is one negative sign. But they are holding 66% means that is good. So that means promoters are holding high percentage promoter holding, that is a positive sign. But from March 2023 to December 23 it was decreased. We need to find why it was decreased. We'll see it. Go to promoters. We'll remove these all the things. Okay, so in promoters, Rajat Agarwal. So previously he have 47%, now currently 41%. It was decreased from 47 to 41%. Okay, where it goes? So if you see this one FIIs, so FIIs increased from 3% to 10%. So Rajat Agarwal maybe sell 3% to here FIS from 3% to 10%. We need to check it. Later we'll open ratestar.in. Here we'll check last 4 quarter results. So if you see here December quarter, so sales decreased 3%. Here profits increased 21%. So we need to check why sales are decreased. Here profits are good, but sales decreased. In September quarter, here sales increased 22%, profits increased 30%. This is a good sign. In June quarter, here sales increased 21%, profits increased 17%. In March quarter, sales increased 12% and profits increased 40%. See, if we see here in all the quarters, profits are positive and also it's near to 20 to 40%. This is a positive sign. And also if we see margins, so in March quarter, margins increased from 6% to 8%. This is positive sign. Here 7.7 to 7.47. Here little bit decreased or flat. Here 6.59% to 7%. This is a positive sign. Here 6.39% to 8.11%. This is a positive sign. Here last 4 quarter results, Gravita India results are good. Also we will see margins for annual results. If you see here, from 2014 to last 12 months. In 2014, here margins are 4%, then here 1% decrease, 1%, then 4.9, 4.3, 1, 2, 3, 6, 7, 7. So previously they have profit margins in the range of 1 to 4. So last 3 years from 2022, margins increased from 6.29% to 7.78%. That means they are doing good from last 3 years. Now check few more things. If you see here financial ratios, so here ROCE, ROE. So here ROE is 41%, ROCE 31%. Here they have high ROE and ROCE. This is a good sign. In 22, 45, 31%. This is a good sign. 21, 23, 19%. This is good sign. Here 17%, 16%. This is also good sign. In March 19, they have less ROE and ROCE. And then in 18, 28%, 22%. This is good sign. Here 26, 20. This is a good sign. Here less. Here also less. This is good. See here ROE and ROCE in 2019, 2016, 15. Here ROE and ROCE are less. Remaining all the years ROE and ROCE is high. So this is positive sign. They have high ROE and ROCE. And receivable days, if you see here, so in 2014, 28 days, then it decreased 23 days, 22 days, 23, then here it increased. Then later 22, 16, 13, 16. So here receivable days are very less. This is positive sign. And payable days, so previously 11 days, 8 days, 9 days, currently 9 days, 17 days, like that. So they are paying within 10 days. That means they are paying the money to vendors. This is a good sign. So inventory days are high. So if you see here 43, 52, 66, currently 72 days. So they are maintaining inventories. So due to this one, they have more inventory days. So we need to analyze why more inventory days. So for example, if they want to supply their products to their clients, they want to maintain more number of days as inventories. Due to that one, here they have more inventories. So we need to find relation between these receivable days, inventory days, payable days. If you see cash conversion cycle, so here in 2014, 60 days, currently 78 days. Then here 22, 60, 67 days, 56 days. So here cash conversion cycle is increased little bit. We need to analyze why cash conversion cycle increased. Then if you see total debt, so here 0.74, 0.89, 0.84, then later it increased to 1.11, here 1.23, here 1.26, 1.21. Here the debt is very high. Later it decreased to 0.95, then 1 here increase, then later decrease, currently 0.58. So this is reasonable debt. What we observe based on financial ratios. So Gravita India ROE and ROCE are very good. That is positive sign. And here receivable days are improved, but inventory days are increased. And total debt decreased from 0.74 to 0.58. Then we'll check few more ratios. Go to screener. Here, if you check current results, here quarter sales decreased 4%, profits increased 20%. This is a positive sign. So we'll exclude quarter on quarter sales. will include only year on year results. So then for 1 year results, here sales growth 12%, profit growth 31%. Here very good. And then 3 years 27% sales growth and profit growth 69%. This is also very good. Here sales growth 5 years 22% and profits 36%. This is also very good. And 7 years, here sales growth is 30% and profit 69%. This is also very good. Now we'll see returns. Here for 1 year, for 1 day, 0.8% decrease, 1 week 7% decrease, 1 month 2% decrease, for 3 months 17% decrease. So here recent quarter results, a sales decreased but profits increased, but here price is decreased 17% in 3 months. So here we need to analyze different relation between current quarter sales and growth and returns. Here price decreased but results are good. For 6 months returns 15%, for 1 year 84%, for 3 years 99%, for 5 years 61%, for 7 years 49%, for 10 years 36%. Here if you see this one, Gravita India 10 years returns are 36.8% CAGR. Now we'll see 1 year investment how much we'll get it. CAGR calculation. We'll open this site. Here we invested 1 lakh in last 10 years and then current value. So here duration is 10 years. And so we got 36.8% for 10 years. Okay, 36.8%. 20 lakhs, 25 lakhs. Here for 36.8%. Yeah, so here 36.8%. So if you invested 1 lakh rupees before 10 years in Gravita India, then we got 23 lakhs with 36.8 CAGR. For example, if we invested 10 lakh rupees, so we got 2 crores 30 lakhs. So here Gravita India gave very good returns for 10 years, 7 years, 5 years, like that. So this is a multi-bagger stock. Now if you see here 10 years before, what's the price? So 10 years before, here price is 38 rupees. Price increased from 38 rupees to 1138 rupees. So overall, its CAGR is 36.8%. This is excellent returns. So we need to find this type of stocks for if you want to get good returns in the future. So it will be difficult to find this type of companies. So for that purpose, we need to analyze in deep to find good stocks. For that purpose, we are analyzing these all the things. Here promoter holding 66.5%. This is high, this is a positive side. Now we'll see the free cash flows. Here free cash flow current year 93 crores. This is a positive side, and free cash flow previous year negative. So we need to check why it's negative. There may be capital expenditure. Due to that one, here free cash flow is negative. We need to check reason for negative free cash flow. Here for 3 years 88 crores, this is a positive, and 5 years this is a positive, and 7 years here 40 crores positive, and 10 years here 51 crores, this is a positive. So their free cash flows are positive throughout 10 years, only previous year here negative. So why they have free cash flows are negative, we need to check it. If you see here CWIP, here capital expenditure work in progress 56 crores. So last year 42 crores. Here they have capital expenditure. Due to this one, here free cash flows are negative. That means here they have capital expenditure. Due to this capital expenditure, their profits and also sales may be increased in the future. So this is a good sign. Due to this capital expenditure, here free cash flows are negative. And here if we see market cap to sales, here 1.97. That means current market cap to sales is 2. So that means this its market to sales is very less. That means this is a undervalued stock comparing with sales. So if you see current PE is 25.7 and 3 years median PE is 19.1. So if you compare with 3 years median PE with current PE, current it is somewhat overvalued. But if you see the results, so results are very good. If you see here so here profits increased from 33 crores to 52 crores, then 52 crores to 139 crores, 139 crores to 201 crores, 201 crores to 233 crores. Here profits are increasing due to this one. So this 25.6% PE is reasonable. Later, now we'll check how they are giving dividends. We'll open BSC website. Click here. If you see here, at 2011 4 rupees, 2012 here 2 times 1.6 rupees, then not 1.6 1.8 3 times, later 2013 2 times, here 60 pies, later 14 here 80 pies, then 15 0.2 pies, 0.2, then here decrease, then 2017 here 0.6 rupees, 0.7, then 2019 0.3, later 2020 here 0.7, then 1.1, 3, 4.5. So in initial years they gave less dividends. Why means if you go to here, if you see debt, here they have debt. So here from 2014 here 0.74, 0.89, 0.84, 1.1, 1.2, here they have debt. Due to this one, in initial years they gave less dividends. So later they decreased their debt. Here they are decreasing debt. So due to this one, they increased dividends. Here they increased dividends. This is positive sign. So debt is decreasing and dividend is increasing. So this is positive. We discussed different things about Gravita India Limited. So we discussed so many things. So few may be wrong. So use your common sense before taking any financial decision. Don't depend on what I am explaining. So you can take your own decision. So if you take your own decision, then you can hold any stock in long term. That's it for today. Thank you for watching. Have a nice day.